Hey everyone, welcome back to the channel. Today we need to talk about what just happened in the cybersecurity sector. On February 20th, 2026, cybersecurity stocks experienced a sharp sell-off, and the trigger was Anthropic's announcement of its new AI native tool, Claude Code Security. The market reaction was immediate and aggressive. Okta dropped as much as 9.6%. CrowdStrike fell nearly 8%, trading around $388. Cloudflare and SailPoint both declined over 6.5%. Zscaler fell about 5.5%, adding to pressure from a JP Morgan price target cut earlier in the day. Even the broader sector ETF, the first trust Nasdaq Cybersecurity ETF, ticker CIBR, fell about 3%. And what makes this even more interesting? The broader Nasdaq composite was actually up around 0.8% midday, snapping its longest weekly losing streak since 2022. So this wasn't a general tech sell-off. This was targeted fear. Now let's talk about why. Anthropic introduced Claude Code Security, powered by its Claude Opus 4.6 model. This isn't just another vulnerability scanner. It's positioned as a proactive automated repair system. Instead of reacting to attacks, it aims to eliminate vulnerabilities at the code level before deployment. Some of its key capabilities include deep semantic reasoning, meaning it can detect complex logic flaws and broken access controls that rule-based scanners often miss. Automated remediation. It doesn't just flag bugs, it suggests targeted patches and lets developers implement fixes directly from the terminal. Agentic verification. It actually tries to disprove its own findings in a multi-stage loop to reduce false positives. It integrates into developer workflows through a /security review command and GitHub Actions, scanning pull requests automatically. And during internal testing, Anthropic claims it found over 500 vulnerabilities in production open source code bases, some undetected for decades. That's impressive. So why did the stocks drop so hard? It comes down to three big fears. First, the shift-left consolidation narrative. Historically, companies buy separate tools for endpoint security like CrowdStrike, identity management like Okta, and cloud protection like Zscaler. But if AI can prevent vulnerabilities before code is deployed, investors worry that downstream monitoring tools become less necessary. Second, pricing pressure. If Anthropic, and eventually OpenAI or Google, bundles security features into their LLM subscriptions, it could compress margins across pure-play cybersecurity companies that charge premium enterprise pricing. Third, labor replacement. A big portion of cybersecurity revenue comes from seats, analysts triaging alerts, reviewing logs, investigating incidents. If AI automates large parts of that workflow, fewer licenses may be needed. That's the fear. But is this an overreaction? Personally, I think in the short term, yes. Here's why. Number one, trust and hallucination risk. Enterprises are not going to let an AI autonomously patch production systems without heavy human oversight. The cost of a bad patch can be catastrophic. Number two, legacy infrastructure. Most enterprises run on old, complex code bases. AI can help, but it can't magically refactor decades of technical debt overnight. Detection and perimeter monitoring are still necessary. Number three, the arms race dynamic. Cybersecurity is a constant cat and mouse game. If defenders use AI to secure code, attackers will use AI to find new attack vectors. In fact, AI may increase the velocity and creativity of cyber attacks, which ironically drives even more demand for cybersecurity products. And here's another point that I think the market is underestimating. Code security is only one layer of the stack. There are many areas AI cannot fully solve, especially access control and identity governance. Understanding who should have access to what requires deep knowledge of business processes, internal roles, forecasting workforce changes, and behavioral patterns. That requires contextual data analysis, not just code scanning. That's not going away. So what we're really seeing today is narrative-driven volatility. The narrative is general AI kills niche software. But cybersecurity is not a single product. It's an ecosystem: identity, network, endpoint, cloud, compliance, data loss prevention, and more. Even if AI improves code quality dramatically, the attack surface keeps expanding: cloud workloads, APIs, IoT devices, remote employees. From my perspective, this looks more like sentiment shock than fundamental destruction. Markets often trade on fear in the first 24 to 72 hours after a major AI announcement. Then investors start asking deeper questions. Personally, I see this as potentially creating selective buying opportunities in high-quality cybersecurity names, especially those already integrating AI into their own platforms. Because remember, the incumbents have something incredibly valuable: data. And in security, data is often more valuable than the model itself. So the big question is not whether AI will impact cybersecurity. It absolutely will. The question is, does it eliminate the need for cybersecurity companies, or does it evolve them? I lean toward evolution, not extinction. But I'd love to hear your thoughts.